All righty, and Friday, May 22nd, 7:59 a.m. And this is Get Soft in the Morning. And look, it's been a bit choppy. There's no question about it. But nonetheless, I believe it's been a good equities or stock trading market, in my opinion, and been a pretty lousy futures trading market. And the tables have definitely turned in that regard, and it's really the price action overall. Just there's no real movement one way or another, and many of you're not getting those big swing moves in the futures market like you did just a few months ago, where now you're getting basically small intraday scalps, and it's been rough. And so I've changed gears a bit. I don't really see much happening. I'm looking at a 1 hour here on the NASDAQ. I start looking in here and I say, all right, we have yesterday's highs 29, about 29,550 or so. There's also an R1 at 29,540. Swing highs intermittently overnight, 29,644. I don't know. And I believe this is the 29.77s. I don't think that is the highs. Is it? Yeah, it is. That is the all-time record highs. And we're still sitting at or near these all-time record highs, and so it really just makes me take a pause and really try to step back and say, look, although the market as a whole may continue to go higher, I think there's better opportunities in individual equities. More importantly, some of which have either gotten hit a bit and maybe on the mend, or even shorts of some companies who've actually done okay and had some run-ups that are in industries or in sectors that likely should slow down. So anyway, that is kind of the story there on the NASDAQ. As far as like today, I don't know. I don't really see anything sticking out that wouldn't stick out otherwise. There's no real areas here of great interest for a trade other than what you would believe would be areas of interest. If you start looking at the 5-minute, you have this area down here at about, the 29,450s, about 50 points away from where we are now. We're just slightly up at 56.75. And then you don't really get any real areas of what I would feel true resistance until you get to yesterday's highs, which is the 29.50s. Another 50 points away here, and then all up and above these highs again. And I just think we're going to have a holiday-like trading day because it is the day before the 3-day weekend. And likely you'll get probably some movement between 9:30 and 10:30. And I think soon after 10:30 upwards till 11 o'clock, you're going to be getting the exit, what I call the exit weekend trade. And I think volumes are going to dissipate greatly after after 11 o'clock today. And I think if you have something else to do, it would probably be a good idea to plan on wrapping it up early. So that's kind of the NASDAQ. And then we move over to the Russell, same sort of thing. The Russell has been probably a little bit easier trade during the day, where it's trended. I mean, yesterday it basically just ran up ridiculously. This whole move yesterday was just absolutely just incredible. It just continued to just rally, just along with everything else. So nothing sticking out here for me, other than maybe, we have R2 2873. I have a couple of alerts up there, and then obviously, a little higher than that. But this is probably going to be the area of interest today for a possible short. I don't know if it really sets up, because if we have a kind of light trading day where we drift, and if we drift up to that area, it's not really going to make for a good trade, because it's not. I don't think you're really going to have the volume or the interest up there for this thing to kind of stop whichever direction it goes. I really see a day where we're maybe up a little bit today, or maybe down, and it's going to be I think it's going to be a pretty lousy day overall. In fact, and that's really the size of it. Gold has been gold. Gold has been I got a couple of nice trades last night in gold, but the problem with gold is there's no real follow through if you're taking longs. If you're taking shorts, you've had a little bit better success with the short trades in gold, because as you can see when you start zooming out on gold, it is trending down. I mean, the trend is down. It does seem to be slowing. The downtrend appears to be kind of like, losing a bit of steam. I think the sellers are getting a little bit tired. But that's not to say that it will continue. It won't continue to go down. It just may go down a little slower than it has. So, overall, gold's still in a position where, I don't really see it turning around anytime soon until everything is wrapped up over there in the Middle East. And so that goes. Its current gold price sitting at 45.22, down about 20 clicks, 19 and a half today. Don't really see any there here on gold. Again, I think it's just going to be a lousy day no matter what you look at. I don't really think there's much of anything going to be happening. One turnaround story which has been actually decent is we finally got some semblance of a recovery in bonds. And I say some semblance because if you look at this, we really have a lot further to go here in bonds before I actually get excited about my longs. But nonetheless, though, we did have a bit of a decent bounce, and we're currently up about 15 clicks today, 111.11, up almost 0.5%. But we do have a long way to go in bonds. Again, I'm looking for bonds back in that 116 area up here. We have a long way to go there. So we'll see what happens there. This also is really important for bonds to be up in this area, for even stocks to continue. I think, I think for stocks to really continue their push higher, because when bonds actually start falling like that and the yields become much more attractive, it kind of pulls money out of the stock market, right? I mean, it is what it is, and that's just kind of a natural, because someone looking for money or a place for money to land, you know what? I'd much rather land in a 10-year bond paying 5% with literally minimal risk than go and chase, a stock market that's at all-time highs. So it's really important for bonds to continue to rally and go up and push rates down for the market to kind of hold its own here. Anyway, so that's kind of that story overall. And no trades there. I'm long already, and I'm getting my butt whipped a bit on many of my longs in bonds. But then the story is I started a little list here on my own, a Get Soft list of some positions that I'm in long and that I've been building long, and then some short positions, couple short positions, and then some neutral. I just call them neutral trades because they're more for, we're selling that volatility as opposed to taking a directional type bias in those. And right now, the ones on the list, and I just did this for the things that I've done in the last, I'm not going to go back and I'm trying to build this list going forward here because a number of people have reached out to me and asked, do you have a list of the stocks that you are trading? And yeah, these are the list, and I'm compiling it now as I go into positions. I'll start putting them in here, and one of which position that I'm probably going to be taking off, if not today, possibly next week, is IBM. Had a big run yesterday. I'm sorry if you missed the boat on this one. This was actually a great buy down here in this 216 area. Big rally yesterday on news about some, I read a little bit about it. It's about some quantum blah, whatever, some data AI thing, right? Of course, it has to do with AI, but some quantum chip thing they're doing, IBM to fund and spin out Aderon, a 300 millimeter quantum water foundry in Albany. Stock rally, blah, blah, blah. So that was kind of the big jump in IBM. I didn't really buy it or get long IBM based on any of that. I got long IBM just on a pure data center play because of their footprint with Linux and and the impact of Linux, Red Hat Linux in the data center and build outs of all these data centers. Although, everyone's saying it's AI. Well, they're not going to just pack these data centers with just AI chips wall to wall. Use your head. They're going to need other infrastructure that runs on Linux to run these AI machines, right? They need infrastructure to run the infrastructure. Like, a lot of people don't even realize that. Like, they think they're building these data centers and then they're just going to have wall-to-wall NVIDIA chips in the racks across the. No, it doesn't work that way. It's like you have to have infrastructure to support the AI, right? And all that other infrastructure, a lot of it is run on Linux and supported by IBM and all these other companies HP and who else is making, I don't even know who's making blades these days. Cisco I know makes blades now, but they're going to need some semblance of other technology that uses either AMD, Intel chips, that sort of thing, even Broadcom, outside of that to run the AI. I like people to just think, they're going to build a data center, they're going to build wall-to-wall NVIDIA chips. No, use your head. It's not. So anyway, that was kind of the play there on IBM, and it's worked out. But it is getting to a level here where I'm actually contemplating, rolling out of my position because it's actually exhausted itself. Because I'm in an in-the-money option here in IBM, and here it is right here. I'm in this in-the-money option, and it's up quite a bit. It's actually at almost max profit, so I'm almost ready to dump it. because there's not much more IBM can go up here for me to make money here. So I pretty much exhausted that. Obviously it could, if it still goes up, this will still gain some value, but at what cost of this going up, right? I don't really stand to make much more out of this. I need to go into a new trade, so I'm likely going to roll out of that. Plus the fact that I like, that it's made it back to where it had problems breaking out. And it does need to break out here. It does need to break out here for this to remain bullish, right? I mean, that's kind of the stopping point for it at this point. And that's when I originally went long on IBM. This was my original target for it. And so I've reached that. So now I got to reassess and quite possibly may go into another long trade. So anyway, that's what's going on with IBM. I do not think you missed the boat. I think just timing is everything. I would definitely be a buyer on a pullback here. I like the fact it's actually up again today a couple of bucks. So things just kind of running away quite a bit, but it does have a lot of room to go here. I mean, we have highs here at 320, things sitting at 560, 260, so it does have some room to run quite a bit. So that's kind of the story there in IBM. In CCJ, I also got long. I saw this as support, and so I decided to step in on that. And do something there. Although this is a kind of two-sided trade, it is skewed positive, right? So I have an iron condor, which is traditionally this is traditionally a neutral trade, but I skewed it by actually selling a closer to the money put spread, giving me positive delta. As you can see, my effective delta in this trade is a 309, so I did skew it bullish. And so that is another trade that I'm in CCJ. There's another one where if at this point I do get another bit of a pullback, I may step in on CCJ out here in July, because I'm already in June. I may step out in July and do like another 100 and sell maybe a 100, like 90, just a put spread. Okay. And then that would actually give me 14 more deltas and then put me up near about 18 or 19 deltas, almost 20 shares of positive. My Ready Fresh Water notification. How about that? So yeah, and so I'd be looking to do that as an add-on to this as well. So there's CCJ and what's going on there. And I'm not willing to do this yet, right? I'd like to do this on a day where it's actually down a little bit. It does look like it's up about $1 today. So likely not going to do that. So there's CCJ, and then there's Mr. Softy. I do think Mr. Softy is still a buy here. Although it's been a pretty choppy ride from these lows down at 350, I think we're in a space here where I think you can actually start really accumulating this on pullbacks. Now, the issue with Mr. Softy is the inability of this to really have any leverage. Like there's the margins in Mr. Softy are pretty bad. And if I were going to do anything here in Mr. Softy, with it being an IV rank of 48, I do like the put spreads. And I do think you can step into a put spread here in June still, if you're going to sell about the 400, which is about the 25. And I see no issue with selling like a 400, 390 here put spread in Mr. Softy in June, knowing you have 27 days. And the reason I like that is because you have kind of two options. Look, if it does nothing, you're fine. And if it even goes down, you have some capability to roll that sucker out into July. All right, and so that is kind of the story there with Mr. Softy. I do not have this position on yet. I would have liked to do that yesterday. Mr. Softy did actually get hit a bit yesterday, but I did not. I kind of got sidetracked and did not do that. So that is the story there with Microsoft. And so I do think it's still in an area where you can accumulate here. Like, look, don't go crazy. Again, I like the put spreads because volatility is high in there, and you might think 48 isn't that high, but historically, if you look at Mr. Softy, this is relatively high. I mean, it's been higher, right? Back when we did our original put spreads, it was much, much higher. But even here at 48, that's still elevated when you have historical volatility. In Mr. Softy runs about 20 to 25. So, you do have some opportunity here to sell a little bit of a premium and then actually get kind of twofold trade, right? Sell a little premium, get some positive delta, and then put yourself into a trade where you got some probability of profit and some flexibility. So anyway, there you go with Mr. Softy. So I like that trade as well. And then we'll talk about the two shorts. One is the obvious, the IGV short is that's just a complete software short. And I'm just shorting overall software stocks at this point. I continue to like that trade. I also, even though I have this as a short trade, IGV has a awesome IV rank for selling. And so even if you're not bearish like I am, you can still sell in here. And I still like the Iron Condor in here in IGV because of that volatility. And you could easily sell outside this range, I think, even at this stage, and do like a 100, 105, and do about an 85, 80, bring in $1.30, use 370 in buying power, right? Skewed a little delta pot negative, but 64% pop, and you have about 27 days, and you pretty much need this thing to be flat, do nothing, even go up a little bit and go down a little bit, but basically just kind of burn away for about a week or week and a half. And you can likely buy this one back for about 50 cents, 60 cents, I think, in about a week, week and a half. So anyway, that I still like that trade as well. Also, I do like a short trade in this. And as I mentioned before, I think the best short trade in this thing is go out to an August, do like an July calendar put spread. I think would be your best bet. And so anyway, I'm going to continue with that. I actually I had a short put spread that I got rid of yesterday. I thought I did. Did I get rid of it yesterday? Maybe not. I think I tried. No, I have it right here. But you can see my Iron Condor in here that I sold just a little while ago. And about 15 days actually has worked out pretty well. Put spread, not so much. I'm in the 90, 85. I kind of like the calendar spread on this. I do like the August, July. And so, this is another reason why you do multiple type of things, folks. There's no one trade, right? That is the go-to. Here I have two trades. One's worked, one hasn't, right? And I'm possibly going to put another one on as well. I kind of like this one. I kind of like the 95, 90 calendar spread. This is what I'd like to do here in IGV, especially the fact that if it's up a bit today, which it does look like it is, I'd like to add on into this a little bit. And again, I'm going with the calendar spread because I like the capability to be able to roll this. I could either roll this up or down. I have 56 days in it, and I could even roll it out into August. So I have a lot of flexibility with the calendar spread. Learn the calendar spreads, folks. They're very powerful, especially in times like these where you look for flexibility. I have found them to be a very powerful spread, more so than just the standard vertical spread. So anyway, that is one that I'm going to be looking at today is IGV, and continue to be bearish on that. I'm also in a put spread in TJ Maxx. I kind of sold that rally it had the other day when it rallied. It kind of fits my overall narrative, if I have one, on being short retail. And I don't think, it's actually still down, but this is also a calendar spread, right? I'm actually long the put spread, put calendar spread, get it right. It's the 160, 155. So the September 160, and then I sold the July 155 for the same reasons as the trade in IGV is I want some flexibility to be able to maneuver that short spread, that short strike in that short month. I could roll it around. I could even roll it out into either August or September. So anyway, again, short TJ Maxx. And I also, with this, I might even step into yet another trade on this because this IV rank really did not collapse that much after earnings. And the fact that it's still up in the 40s at 46, and then historically, this thing runs, historically this thing runs in the 30s. And so the fact that it's up near 46 still is kind of, leading me to possibly lean into maybe an iron condor into June here. I really have to maneuver it. I don't know if you're really going to get, let's see, I have to look. Don't really see, there's not much implied there. No, the implied volatility in the underlying just isn't there. No, it's not there at all. Even though the IV rank is relatively high, the implied in the monthly is no good. So scratch that. No trade there. So that's it with TJ Maxx. But I may actually lean into this one short again and do yet another calendar spread, but not yet. So anyway, there's TJ Maxx. We went over IG. And then NBIS is a pure volatility play. Volatility in NBIS continues to be high. I've been repeating, rinsing, and repeating this trade for quite a while now in NBIS. IV rank at 88.6, so it's still a premium seller's dream. And I'm going to continue with that kind of motif on this. And even looking in here, even though we have 27 days left, I still like selling a little bit in here because you can basically sell the edges here and have a pretty big berth. Expected move of $50, but you can still have a pretty big berth here and do something like this. Bring in $1.52. Use $348 of buying power. And to me, have a pretty nice trade that, look, you're not going to hold on to this forever, but you're really only going to look to hold on to this for maybe a week. Look for a little bit of a crush here, pull some theta in and, get 66% pop. Kind of still like that trade. Wash, rinse, and repeat. I've been kind of doing this same trade with NBIS now for about 6 months. And I guess, if it ain't broke, don't fix it and just keep doing it. So again, another trade I think here in NBIS is actually worthwhile. I might even put this on today because I kind of little light. I took off most of my other positions in NBIS. And so, again, with 26 days, I kind of like that on NBIS. And so that is that. That's all I got. I don't really have anything else. I got in under 30 minutes, which is kind of what I wanted to do. Still nothing really going on in equities, just kind of the usual, I'm going to call holiday kind of drift higher, which is fine. We're up now 10 points on the Russell, almost 100 on the NASDAQ, 25 on the ES. Dow is up for a 240, 280, 289, 290. But that's actually rallying a little bit. And I think there is a number today. That's probably why. Leading index, Michigan, no, actually nothing at 8:30. So only at 10 o'clock. And that is it. And so have a good weekend. Trade them tight. Be cautious today. Don't do anything stupid. And I will be back